Now, let me repeat that again to make it make a little bit more sense. It's 20% skills and technicals. Honestly, I'd probably say less than that. Forex is literally just as simple as support, resistance, and a trend line, you know? But it's like literally like 80, 90% mindset. You know, if you are going to do Forex, you need to come in with the mentality that you're going to do well. Okay? One thing that I'm sick and tired of seeing, I love you all, but you guys don't really need to be on the charts every day. Like, you don't need to be looking at your phone every single minute of the day. Literally, if you have not made profit from when you first put in the trade, chances are an hour later, if you're looking at a bigger time frame, you're not going to have that same profit. You need to give it time, you know. And so that's why with Forex, you know, one thing that I usually did wrong is that I didn't really have the mindset at first for it. You know, I didn't really have a thick skin, you know, and I really was too emotional with this, you know. And so I'm going to teach you guys a little bit more as to the mindset game with Forex, but I'm going to show you guys a little bit more as to why the market moves as it does, you know, because that's the biggest thing. If you guys can figure out why the markets move, why they do, you'll do well, you know. And to kind of start off, okay, I'm going to go over what makes the markets move, okay? So what does make a market move? We need to analyze this and understand this, because when we're looking at charts, what I notice is that a lot of times Forex is not just technicals, you know what I mean? That's why when people come in and do crypto, they lose a lot of money, because crypto especially is literally anything but technicals. It's probably the complete inverse of that. It's literally fundamental analysis. And if you guys stick to that, what makes the market move is what? The economy, right? The economy will make a market move. That's literally what Forex is. We're talking about a $5.3 trillion a day market. Do you guys really think what makes it move are banks? Do you guys really think what makes it move are us retail traders? The fact that we're all selling? No, 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 no. It's a lot bigger than that. What makes the market move is the economy. What do you guys look for when you're looking at that? Look, if you guys are looking at one pair, right? If you guys are looking at GBP, USD, right? What will make this market move? Well, one, right? If you guys haven't heard, Dakota, what was that one name of, like, here, I'll get the exact name for you, because I'm really bad at pronunciation.
Brexit.
There you go. All right. Have you guys read this article at all? Have you seen anything related to this at all? Because this right here is going to give you a big indication as where the pound is going to go for like the next year. Okay. Let me see. Look at the chat real quick. Okay.
I heard and Brian heard.
Yep. So if you guys know what happened, long story short, right? Here, Dakota, you want to explain, since you read like the whole thing in depth, and I don't feel like explaining this.
All right, so Brexit is basically improv, like, what is it called? Impromptu of two different words. It stands for British exit. It's because the United Kingdom of Great Britain, part of Scotland, and I believe Wales are leaving the United Kingdom, and that will basically lose the Great British Pound's power against the euro and against the US dollar, because like the euro and the GBP were gaining strength against that. So yeah, GBP going down on most pairs, if not all, depending on how the other.
All of them. Like, it's crazy. You guys would have noticed it. But simple things like this will make an economy fall. You know what I mean? What's another thing that will help us out, right? The US dollar doing well, right? So if we look at the US economy, I'm not going to lie, we've been gaining a lot of strength with the US economy. Honestly, okay, so it means we should start selling you. Okay, no, 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 no. I'm not talking about trading right now. I'm not saying any of that. I'm literally just letting you know you need to look at trading in a different scope. It's not buy or sells. It's not we're going to buy it now or sell it now. We need to know what's happening with the world economy, so that when you make these type of trades, right, you have that bias included in your trade. So the US economy has been doing fairly well since February, okay? Look at the charts, guys. I don't think I've ever seen anyone really send me a chart and say, yo, I think the pound US dollar is going to shoot down for the next couple weeks. Dude, if anyone has rocked with me since June, I literally called out that if you short the pound, right, for like the whole month of June and hold it for a whole month or two, right, I told you guys, sell it, leave it there for a month or two, it's going to shoot down, and it's going to reach the lowest point it's ever reached in history. I've still held true to my word. The pound is going to shoot down to the lowest point in history. Go on the month chart, see the bottom support right there. That's where it's going to reach minimum, okay? I've been calling that out. I've literally, it's just a matter of looking at the world economy. How many times have you guys looked up the world economy and looked up what's happening with NATO, right? Trying to see if there's any example. What made a lot of the European currencies go down is the fact that there's a lot of laws passed with NATO that were affecting these smaller countries, right, in the European Union. So what happens is, because there's a lot of more laws that are making it a lot more harder for money to be made, right, a lot of bills that are just fucking up with the people and the economy in general, there's less money being produced and pumped through that economy, which makes the currency fall down overall. That's how I knew that the European currencies were going to shoot down. And the dollar has been holding its strength since February. It's been holding its strength since February. So the odds of this really shooting down in favor of the US dollar is BS. I think the dollar is going to do amazing right now. Pretty soon it's probably going to come down. I don't know when, but just stay close to news, right? What happened when the US made an agreement with North Korea, right? Alliances. Now we're importing, now we're exporting, we're making more money's being pumped between both economies. US dollar shot up, right? That's why the other currencies shot down. The majority of the Forex market is constructed of the US dollar, right? About 80% of the money that's being traded is based off of the US dollar. So you want to always look at the US dollar first. That's what I do, right? And then I make my bias on every other pair, right? That's it. Look at what's happening with the economy. Look what's happening with the overall country. Like, get really down with this. You know what I mean? And the only reason why I say that is because that's really helped me out a lot. When I was new and I would like ask Jasmine a bunch of questions, why is this currency going down? Why is this going up long term? I don't understand. She would get into specifics, like specific laws that were passed, right? Specific instances that made it shoot down or go up in whatever currency that we're looking at, right? That's why I've honestly had a lot of luck with the European currencies, because that's what she's mastered. And I've learned a lot of the stuff that would happen, that's being pumped throughout the whole world, you know? World history isn't just something that we learn, guys, like in a textbook in high school or something or college. This is like an everyday kind of thing. And trust me, this is what will make you a way more profitable trader. A lot of people don't like to trade news, and that's why they'll literally lose a lot of trades. Like, oh, why didn't it respect this level of support? Well, did you not see how, pretty much what we just went over right now, the Brexit, right? That's what caused it to shoot down past that level of support and continue to shoot down to that negative 127, right? I'm telling you, if you look at that, you're going to do well. Look at the whole overall scope, okay? So you guys need to look at the overall scope, look at news. I know it sounds annoying, right? But just stay up to date. If you guys like a specific pair, look at what's happening with that economy. Look what's happening with the country. See if there's any laws that were passed. Look at unemployment. There's a lot of things you want to take into consideration, right? And it's not that tedious. It's not like you really have to do that, but it just will help you out overall to get a bias as to where an economy will go longer term. So as you're making these trades, you never fight a trend. That's the thing I always tell you guys. Why will you fight a trend? If you know the pound's going to shoot down for until next March, why the hell are you going to try to buy it? You know what I mean? Unless you're riding a really, really good pullback, I wouldn't recommend it, It's really, really hard, even for me, to get a good entry for a pullback. It's really, really hard to counter trend. I've blown the most accounts trying to counter trend, and then I have just following the trend. You know what I mean? That's why I tell you guys to always look at the overall trend, because if you follow the overall trend, you're covered. You're good. You know what I mean? It's not like you're going to lose as much money as you would just trying to counter trend because you think it's going up because it's been going down for too long. You know what I mean? That doesn't make any sense to me. But okay, moving on. One thing that I would suggest if you guys are trading, right, you need to know, right, what moves the market. Of course, news, right? Banks, okay? We need to know when the banks invest. How do we know when the banks invest? Trust me, you'll know. The minute you see a currency pair shooting down, that is a bank right there, literally. It's just plain and simple. And with the banks, what you need to know about them is they fake you out. Literally, every loss that I see people take, why did this shoot up after I thought it was shooting down? The banks are trying to fake you out, hon. You placed a buy, you're trying to catch that pullback because you thought it was a reversal, because the banks are trying to fake you out, and what did you do? You got faked out. You know what I mean? Happens each and every time. That's literally, you need to know why markets shoot up or down. It's not because the pair just randomly decided to go up. It's not that it's a reversal. Think about it, right? If the banks know that we know that overall currency pairs are going to fall and shoot down, right? Like the British pound going to shoot down for the next month or two. If the banks know that we know that, right? But then all of a sudden they invest a hell of a lot of money into the pound, so it shoots up, right? Which has actually happened a couple times. The minute we call it a sell, it'll shoot up. and it'll come right back down. Why? Because the banks want to fake you out. They want you to put in your buys, put in your buys. Oh my gosh, it's reversing, it's going up, blah, blah, blah. Perfect example, Bitcoin. How many, like when Bitcoin hit 5,800, how many people were trying to keep on selling it, keep selling it, keep selling it, keep selling it? What did it do? Shot up to 8 grand. You know what I mean? Then what did it do when people kept buying? I'm buying it, it's going up to 20K, 20K, buying, shot down to over 6 grand now. You know what I mean? Those are banks. They work like that. Their goal is to make more money. I'm sorry to break this to you guys, but Forex is kind of like a man eat man kind of world. You know what I mean? Because the money that we're losing, they're making. And the money that we're making, they're losing. Okay? That's how it works in the Forex market. So it's kind of like survival of the fittest in that sense. So you guys want to go ahead and you guys want to go ahead and just keep that in mind. You know? How do you avoid that? Go with the overall trend, right? You guys know what reversal patterns are. I've never ever once like would teach you something that will not work. If you know that something is going on an uptrend, right? If you don't see a double top, if you don't see a head and shoulders, if you don't see some sort of rising wedge, right? If you don't see some sort of shift in momentum, those are not, you think because it's just been doing this and it's been going up, this is a good indication to sell because it's been going up for too long. That is like the worst bias I have ever heard in my life. Oh, it has to be going down because it's been going up too long. Who cares? That's a good thing. Like, this is not a game of like, literally, what makes an economy go up? What if the economy is falling to shit over there? You know what I mean? That's why it's going up or going down. You know what I mean? Like, you need to know why it's moving that way. Now, the market is so repetitive that when you see these patterns, that's what they're formed for. These are the only kinds of reversals you'll ever see. You know what I mean? You'll only see a reversal happen like with these kinds of patterns. The biggest one is either a shift in momentum or a double top or a head and shoulders. These are the main kinds of reversal patterns, probably like the only ones you'll ever see. That's why when you guys are telling me, oh, I think, you know, this currency is going to reverse. Okay, what's your bias? What time frame did you see the reversal at? Because I didn't see it. Oh, well, I've seen it shoot down for too long and then it started to go up. My God, no. That doesn't fly with me. I will literally just like not even read that, you know, because there's a lot of things that you need to learn about reversal pattern. You need to know why the market moves as it does. Okay. Another way to avoid this, I don't know about you guys, but the safest way to do that is use key levels. Okay, so when you're looking at a chart and you're asking me, bro, like, how do you know when like a pair is going to continue to shoot down? Like, example yesterday, I told you guys if the odd were to go down past that 400 mark, right, sell it. Why? Because that was a key level right there. I told you guys if the price shot down from there, you're gonna sell it, right? I gave you every single time frame that I was looking at because I was like, look, this is a key level. It is a really strong level of support, right? What that means is that price never really felt comfortable breaking that like price floor, right? So the minute that it broke past that price floor, what did that become now? The new price ceiling, right? So what happened? The pound, the GBP AUD shot down. Like even now, I think you would have caught like a good 80, 60 to 80 pips already since like yesterday, since I called it out. Literally, I put in my call levels, got an alert, and boom. Literally, right when like even like an hour later, I put it in, got my alert. You know, you need to use key levels. How do you find your key levels? Find levels of support and resistance on the week chart. I'll go all time charts. Month chart, because these are the strongest levels, right? Week chart and day chart. Okay, that's how you guys avoid getting faked out. So when you guys are asking me, well, hey, why is it that I thought this pair was really going to shoot up right here? It reached a level of support right here. Why didn't this go up? Well, if we look at the week chart, it broke past that level of support. You know what I mean? The candle formed right under that. You're looking at the wrong level of support. Yeah, you're looking at a good one, right? If we were looking at only the hour chart, but a support on the month chart, on the week chart, or on the day chart is a lot stronger than one on the hour, 4 hour, 15, 35, 1. I don't care. You know what I mean? And sometimes, like when I say when it breaks a key level, I don't mean if you look at the 4 hour, you got your key level on the day chart, right? And it's at a certain price. and then you look at the 4 hour and it broke it, that's not enough confirmation. If you're looking at a key level on the day chart, you want it to either form above or below on that day chart. That's why Forex is literally like just patience, right? That's how Dakota does his swing trades. Because when you do the quarter theory, right, this is why a lot of people get faked out. If you literally just go on the day chart and you wait to see when a candlestick forms above or below a key level, right, which is a quarter level, you know it's either going to go up to the next one or down to the next one. You know what I mean? And if you don't feel comfortable risking it and waiting those 250 pips, I already told you guys, don't. I've given you so many different ways. Scalp 50, scalp 83, scalp 15 pips. Like there's so many ways to make your money. You know what I mean? And if you just combine what you know with the news, with just a quarter theory, right? And you literally just look at bigger time frames so you don't get faked out, you will be a good trader. You don't need to be at the charts every day. You don't need to be on these Zooms. You don't need to be looking at the harmonic scanner. The only reason why a lot of people do bad with Forex or blow a lot of accounts is because, like I said, one, you guys trade stack too much. And I don't mean that you guys have like 5 trades of the same trade, because I do that all the time. Okay. What I mean is you guys will literally try to catch 150 pips on one pair, 150 pips on another, 300 pips on here, 1,000 pips on here, 10,000 on this one with a little $100 account. You know what I mean? And you're trying to swing trade like 5, 6 different trades. You know what I mean? Sometimes you don't even need to do that. It's literally as simple as saying, yo, we have over 28 currency pairs. Trust me, there's always going to be one pair that is moving, at least in one direction, that you can make good money on. Dakota, am I right or am I wrong? At least one pair out of all of them out there. One of them will give you at least a good 50 pip move in a day.
Yeah, there's 28, and all the biggest strong ones move an average of 80 plus a day. So there's no way you guys are not catching at least 50 a day.
You know what I mean? There we go. My point proven. You don't need to look for every single currency pair, right? That's why I've told you guys since the beginning. If everyone just masters one pair, you're good. Sometimes that's why I taught you the quarter theory, so you can mark up all of them. You look at a larger time frame and you literally place your call levels, right? If price reaches above this level right here, I'll buy. If price reaches below this level right here, I will sell, right? That's all you need to know. You don't need to be on the charts every day. You don't need to ask, what's up? What am I trading today? Oh, are you staying up for London tonight? No, you don't need to. Unless you're trying to scalp, right? But scalping is not bad. But at the end of the day, guys, I like to go and do other things, like go to the pool. I like to drink with like the whole squad, right? I like to go to new places. I don't like to be on my computer all day looking at charts. I don't know if I have like ADHD or something, but I always need to be moving. I cannot stay in the same place for hours. I feel so irritated. I need to be out and about. I don't like to, that's not me. I can't do that, okay? You put in your trade, you forget about them, you come back, and you either what, made your profit or you lost it. I've told you guys so many times, to become the top trader out there, I will give you the golden nugget. You guys ready? Write this down. Do not trade with emotions, okay? Do not trade with emotions, and you will be the best trader there is out there. What do I mean? Literally, if you feel like you need to look at your phone every 5 minutes and you're literally worried because your pair is not moving in the direction and you only have, like, I would say less than a $10,000 account, why are you, and even then, why are you stressing out? I don't understand. You know what I mean? I just really don't understand that, because it's like, I get your frustration. I don't think you guys are irritated at the fact that you're losing like money, or you're like all of that. I think you guys are irritated at the fact that your trades are not panning out. And literally, you need to be okay with losing money, right? You need to be okay with that. You need to accept the fact that you're going to take losses. Now, this is what will differentiate a good trader and a bad trader. If you guys take an L, do not just rub it off and say, oh, next trade I'll do better. No, 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 no. I want you guys to study your losses more than you do your profits. Why? Because, example, I lost on a UJ trade today. I'm not afraid to say it, right? I didn't take that big an L, but I took an L because I was like, I don't think this is moving in my favor anymore, right? And I went back and I studied, why do I think this is going wrong? I broke under a key level, right? I broke past a strong level of support that I wasn't even paying attention at the time. You know what I mean? I looked at a lot of indicators on a larger time frame, and all of them were just letting me know, hey, you're actually wrong about this, dude. You need to get the hell out of here. So I cut my ties, I cut my losses before I got even worse. Okay? And that's my point, guys. Like, if you guys study your losses more, do you think when you see something happen like that again, you're going to take that kind of trade? Hell no, you won't. You're
Nope.
gonna say, "Oh fuck no, I saw you last time, you little shit, and you're not gonna pick me out this time." I wish you would. You know what I mean? Let me look at the
Come
chart.
at me, bro.
Literally, no emotion. Literally, literally, literally. And yes, Tiffany, you're right. Keep a trading journal. I literally have a journal, like a little notebook, and I just write the day, and I write the trades that I put in, and I write why I took those trades. Strong level of support, strong level of resistance, 61.8 on my fib, MACD, SAR. Like a lot of times I'll ask you guys, and it's not because I'm trying to be a jerk or a jackass. I literally just am curious. I don't watch every single pair. I'm probably like not even like I'm probably like the least. As Dakota, when he was here, I hardly ever was on my charts when he was out here in Cali. I just try to like avoid being on my charts all the time because I know what it's like to literally be glued on it all the time, and you feel like you need to be stuck on the charts, and you don't. You really don't. And so literally, I do try the most to not even look at the charts. If I take an L, fuck it. It's just what, $1,000, $100, $500. I used to spend that on drugs. I used to spend that on going out. Like that is nothing for me. Okay, that's fine. I'm okay with risking that much. It's better me spending it on Forex and getting this education and learning from my losses than it would spending it on drugs and getting turned up. You know what I mean? That's why I study my losses more, and I don't care. You know what I mean? But I forgot what my point was. Either way, my point being is you need to keep a trading journal and literally write down why you're taking these trades. Oh, that's why. You need to write down why you're taking your trade. So when I ask you guys, like, hey, why did you take this trade? Why are you buying? I'm not asking you because it's like a rhetorical question. I genuinely want to know. You know what I mean? Because like that, even with Dakota, sometimes we'll look at charts and I'll tell Dakota, yo, I think this trade is going to be buy or sell. Why? Oh, because I'm looking at this, that. And I'll ask him, what do you think? Right? And he will tell me, well, bro, I kind of see this, that. And if I see like that he's giving me more valid reasons than what I'm looking at, I might agree with him. You know what I mean? It's not that I want to be a jerk and ask you, so what are you looking at? Tell me. You know, I don't, don't get me, like, don't, if I ever come at you, like, I'm not trying to put you down for your trade. I genuinely want to know what you're looking at. Because sometimes you will know more than I do. You're going to see something that I might not see in the market, you know? You might have seen an article that I haven't even read that severely impacted that currency, and that might be that breaking point that makes the currency reverse. You know what I mean? You might like you have a confirmation list. That's why I gave you guys one. I don't give you all of these things for tips. You know what I mean? Just for fun. Like use it. You know that will make you a good trader. You guys just literally trust your instinct. You guys have 5 confirmations for taking a trade. Sometimes, like I said, with me, I try to keep trading as simple as possible. Support, resistance, and a trend line is all you really need sometimes. That's literally it. That's how I've been trading gold this whole time. Like this whole week, I've been literally raping that currency. Why? Because it broke my level of support, or well, respected my resistance, broke a trend line, formed a pattern. I'm taking it. All right, cool. Hit a level of support, didn't break past it for like the past week. I'm taking that buy, right? Reach that same level of resistance, formed another pattern, reversal, I'm selling. You know, MACDs, sell, take it. You know what I mean? Like there's a lot of different things I use, but I really try to keep it as simple. Honestly, just by having like 1 or 2 different good confirmations, sometimes all you need, you know? Don't think that you need 100 different confirmations. Just have a really, really solid reason. If it breaks your weekly support or resistance, that is a really strong reason. I don't really need much other like input other than that. It broke a weekly or a monthly. Ooh, count me in. I will be in with you guys. I will trade a standard too. But that's all you need sometimes, you know? Dakota, is there anything you want to add so far? Okay. So yeah, guys, so how to like become experts, news, right? Try to understand how the banks work. Understand that the banks will try to fake you out. And by banks, sometimes I even mean your brokers too. So brokers stop hunt, by the way. So when you guys input your stop losses with your brokers, sometimes they'll purposely make the market move in your favor, or I mean, in the opposite favor. They'll like literally like invest a lot of money in the opposite direction to hit your stop loss and everybody else that has like their accounts with them so they can make your money. You know what I mean? That unfortunately, that's how the world works, right? People are always like I said, Forex is literally just survival of the fittest. The person that can avoid the losses, the banks will literally trade in your favor. I hate to break it to you guys, but the top traders out there, a lot of the reasons as to why they're top traders is because not a lot of people can understand why the markets move as they do. Not a lot of people are that like fairly good, I would say, especially to be on like Dakota's level. So what happens is a lot of times, especially with their brokers, when 95% of the market is trading in one favor, which is the retail traders, which is us, right? And then there's that 5% that know how to trade like the banks do, right? Which is those retail traders, that 5% that know how to trade, and the 95 that don't. The banks will purposely make those trades for that 5% of those traders work because they know that the majority of the people are not taking those same trades. You know what I mean? Because they know how the market works, right? That's just fact. I hate to break that to you guys, but honestly, sometimes, like I said, that's why I love the quarter theory, because when I was told that that's what the banks use to trade, say no more, right? Who are we trading against? We're not trading against each other. We're trading against the banks. You know what I mean? So if you could trade like the banks, you'll make as much money as the banks, and they're going to trade with you. You know what I mean? They're going to literally grow your money. That's how you guys become a good trader, literally. And if you don't want to wait 250 down pips, that's fine. I already told you. Get 83 pips in dip. Get 50 pips in dip. Get 25 pips in dip. But trade in favor of the bank. Okay? One thing I want you guys to do too is look back in history. I don't mean go to the library and look up like all of the news about whatever. What I mean, go on your currency pair and go on the month, week, day chart and find your key levels since the beginning of that currency's existence. Okay, so this might be a little bit wordy and confusing, but my point is, let's say you're trading GBP or USD, right? GBP USD. What I want you to do is go on the month chart, go all the way back to like 1994 when that currency first started, look for patterns, right? And look for strong areas of support and resistance. Chances are those are going to be the same support and resistance levels that we're looking at now, right? Do the same thing on the week chart, label them, do the same thing on the day chart. What you'll notice is that the quarter theory is literally the month chart. That's why we go on the month chart and we break it down, right? And that's why we break it down as we do, because literally it's the same thing. But for a lot of people that don't really understand that, or they want more confirmations, they want that exact perfect entry. Okay, if you're not happy with the quarter theory, literally go on the month chart, week chart, day chart on GBPUSD. Go on, draw horizontal lines of support and resistance, right? Look how accurate your fibs are, around what type of retracement does it make, how far does it shoot up, how far does it shoot down. Use those levels, get your key levels, look back in history, right? And learn that pair, right? Another way, what I want you guys to do is go on any like place where you can find news, right? I want you guys to go on and let's go on like maybe the week chart, or no, let's go on the day chart, right? I want you to go on the day chart and I want you to look up a news article. If you see that last year, right, I don't know, Trump passed a law and 5,000 people got unemployed, I want you to see the exact time and day that that was published. Go on to a USD pair, look at the exact time and the day, and calculate how many pips that shot up or down. So when you see a news article that's similar to that, you will know how many pips it's supposed to shoot up or down, right? You see somebody in London got shot around the liquor corner, and because that happened, the pound shot down like 20 pips, right? Tomorrow, if somebody were to die at the corner of the liquor store in London, what will the pound do? It'll shoot down 20 pips. You know what I mean? Learn how the news affects the market. Look back in history, find strong areas of support, find strong areas of resistance. Get what's done. If you don't know why a pair is moving why it does, if you cannot tell me why it's moving long term, whether it's because a bill that was passed, a law that was passed, example, I still don't know how to say that name or whatever that you always tell me about, but example, right? The UK and just a bunch of like conflict in general with Great Britain and the European Union, right? There's been a lot of tension with them lately. There's been a lot of issues with them in comparison to most other currencies out there in different economies. If you guys cannot tell me why a currency is going long term in a certain direction, then I hate to break it to you, but sometimes that is not like trading is just a lot more than a simple support resistance in a trend line and looking at a chart. Okay, There's a lot of different factors. So if you guys keep it like this and you know why a pair is moving, you're confident. Instead of you guys always looking at charts 24/7, why don't you just like spend like a whole day like researching a currency pair? You know what I mean? Researching the economy. And trust me, you won't need to look at a chart that often. You can mark up your quarter theory and you could stay up to date with the news and you know what's happening, right? That's literally when I first started trading back in April, I noticed that the pound was shooting down like crazy, severely, right? If you guys would have shorted the pound since April, I will show you guys how much it shot down. GBP USD, you can see how much pips are dropping. That's why I got a better bias in June. Like, oh no. This is not going to be going up anytime soon. And I've been calling it. The pound's going to shoot down to the lowest point in history. Minimum, it's going to go down. I think Dante, did I tell you about that a while back? Dante, I think we're on a Zoom once. Do you remember that? Dante, are you on?
Yeah, I'm still here, but yeah, I remember that.
Remember I told you the pound is going to shoot to the lowest point in history?
Yeah.
It's going to shoot to the lowest point in history minimum. All right. I wasn't kidding. And I'll show you how many pips you would have caught if you just would have placed a sell last month and forgot about it. Like, let's do that now. Watch. And I'm going to show you guys how to top up and analyze the currency. Let's go on this one. Okay. GBP USD. Day chart. So back in April, this is when I noticed that GBP was shooting down like crazy. That was April 17th of this year, a couple days before my birthday. Shot down, right? Shot down, shot down, shot down. Right around June, right here. Like coming into June, right about this high, because it's like mid-month, like probably like around this area. This is when I started calling out, like, yo, I think the pound is going to shoot down like a lot. 588 pips to be exact, you know? And you literally could have lived your life and just caught 588 pips. You know what I mean? If you would have shorted it from up here back in April, the pound shot over 1,500 pips. You know what I mean? There's got to be something really big other than it's just been going up for so long that is making this currency pair really shoot down. You know what I mean? There's a lot of different information that's making it do that. And this is what I've been calling out. The pound is going to shoot to the lowest point in history. I'm calling out that the pound is going to either come to a minimum of here, if not go past that. Okay? It has just not been a pretty much healthy economy this whole year. We'll see. But there's a lot of things you need to look at. So when I tell you guys, like, hey, let's analyze a chart and go back to history, watch. Go on my other trading view because I don't want to mess with no, not that one. I don't want to mess with the quarter theory charts. I'm gonna literally show you guys how to easily just come in and make your money. Watch. This is what I mean by analyze your currencies. Oh, this decides to hurry up. Oh, duh. Why did you just tell me? I don't know how to type. Let's remove all bias on here. I'm even going to remove my lovely indicators, okay? You guys know that I'm a slut for indicators, but we don't need this. Just for regular trading and all that, you don't need it. So what I mean is I'll start off on, let's just do the month chart. I'll stop being lazy. Month chart. Okay. Support, resistance, 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 resistance. Level of resistance, support right here. This one probably a good level of support. Resistance, right? Support, support. This is another reason how I knew that the pound was going to kind of shoot down. Back around like I'm telling you, April, it broke this price floor right here, right? So that becomes your new what? Resistance, right? And you trade from support to resistance, right? That's how I got my bias, by the way. Back in April, it was literally testing this zone right here. Never was there a clear formation as to where price was going. And what happened? Broke through. You know what I mean? And the way that you guys, well, that's why I tell you guys trade patterns, because the only reason why I say that is not because I'm being annoying, but because usually when you guys see some sort of reversal, you will notice that there's some sort of patterns. I can guarantee you a lot of people's charts are not going to be marked up like this, right? But look, obviously the market likes to form, and this pair at least likes to form double bottoms, so I get it at once. If anything, what I think might happen if the pound decides to get its shit together is, look, it might form a double bottom, right? We'll see. If it decides to respect this support and come back to resistance, looks like a pretty clean double bottom to me, you know? Usually when you see something on the month chart, it's a lot more crystal clear. Another reason you could have called out that this is going down, right? What kind of pattern is this? A double top, right? What does that indicate? A trend reversal coming up, coming down. Let's keep going. Overall, a nice little double bottom. And right here, formed a double top. Head and shoulders. Double top. Like, even give you that pullback that I always talk about, right? Got your double bottom right here. This one was a cute little head and shoulders. You know what I mean? And literally that's what I do to kind of get my bias. So, and what I say is, when I say like go back in history and do this, yeah, it seems kind of tedious, but you know when it breaks these levels, it's a lot more serious. Another thing that I'll tell you to do usually is to run a fib and try to figure out like how accurate your fibs are. What kind of levels does it look like? You know, example, if we're looking at this uptrend right here, we're calling this uptrend. We want to see what kind of retracement retraced in between our 61 to 78, right? Where did it go to? Our 27%, right? So I would have this be a level for me. And when I see this level, red, right? Because usually more than often, if it touches this level, it's probably going to go back down. Came back and it hit my 127, right? If you know anywhere, like any way, like how Kim trades, literally this is like what she does. She looks at key levels and she'll have her fibs, usually like the same fibs. She'll just kind of adjust it for the following week. She'll use like one whole week's worth of highs and lows, run a fib, and she'll just trade along 27 if it breaks past this level. Like right here, the only reason why we want to sell this is because there was no crystal clear candle formed above the negative 27, right? So why would you guys want to buy this? This is not going up. It respected it. You got your profit. Now get the hell out of there. How long do you hold it for? You literally use the same fib as your take profit. Use your 0, use your 23, use your 38, your 61, your 78, your one, like use whatever levels you want, but use a fib to give you guys a set take profit. Yeah, literally, it's so simple. I'm telling you, if you're looking at an uptrend, you draw it from the lowest low, highest high. You look at this retracement, this 78.6, respected it, it wicked it, came up, tapped your negative 27. Did it break above this? No. It respected it, which is why we didn't hold it to our 161, you know? What happened? Came back down and it gave us an entry, you know? Another thing you could have done is from this high to this low right here, we're going to look at it again. My favorite zone is my 61.8. What did it do right here? It tapped it, right? You would have held it to either your 127. Did it hit? Yes. Now it formed under my negative 27%. Value would have called it for 61.8 or negative 61.8, right? Did it hit? Hell yes. Now when it usually breaks or when it usually forms like at or when it hits this level, right? You're looking at some sort of okay, no, you guys no. We're gonna be on here. I don't need you guys being loud. Okay. Um but okay, I'll answer the questions right now. I lost my thought. But yeah, when you're looking at a fib downtrend, retracement to my 61.8, did it form above it? No, that's why this is a valid fib, right? Respected it. Oh my gosh, what kind of a pattern is this, guys? A double top. What does that indicate? That this uptrend is not going up anymore, right? This is going down. One indication, fib, right? It broke past this level of support. This bad boy is going down. Broke past our negative 27, it hit this, formed under, we're writing it our 161. It hit our 161, right? Usually around there, you want to be more cautious and you want to look for a reversal. What happened? Formed a double bottom, went back up. How far do you write it to? You write it to the same levels on the fib. And if it breaks it, you keep using those same levels. If you notice, these are like the same levels that we're looking at right here, right here. They're usually like the same take profits, usually the same distance, you know? You could still use different fibs though. Look, lowest low, right? We could write it to maybe this highest high, maybe this one here. This one was a shorter kind of retracement, hit our 38, went up, 27, right? You could draw a line there. If you notice, this negative 27 is a strong level of support, which is where the same line I have my red line here. It's literally the same fib. Like this is the same thing that we're looking at, same levels, you know what I mean? Yeah, granted, it's like a couple pips of difference, but my point being is that your fibs for a time or any currency pair are usually accurate. This is where you get your key levels. This is how you find out how far to hold your trades to. This is when you get a better like bias on, hey, I don't really think this is going up or down anymore. Okay. Do you guys kind of see what I'm looking at though? Like I don't want to just show you this and be like, what the hell am I looking at? Sometimes it's just as simple as it breaks your support. It breaks like literally another way that you can confirm this if this seemed too hard for you, draw a downtrend line. This one on downtrend, right? Broke my trend line, went up, okay? So from here, lowest point, you want to draw a trend line up. Broke my trend line, sell. Right here, you'd want to draw a trend line. Broke my trend line, buy. You could have drawn multiple here and traded this whole consolidation. Broke my trend line, sell, came back, retested, right? Could have drew a trend line like this. The minute it crosses this level, you know, could have drawn a trend line like this. Catch that little shoot up, you know, whatever you want to look at. Literally, sometimes a trend line is really all you need. How would you have been able to tell that this is going to go down? You would have drew a trend line, and if you knew that this crossed this trend, or if you broke that trend line, sell, right? Would have used that same distance, double sell, double top, fib, key level, broke past support, you're good. Okay, this is on the week chart. Like these are really strong areas. So when we're looking at price, like right now, I hate when it does that. Get the fuck out of my, yeah, thank you. Okay, how would you guys be able to know that this is going down? Could have been able to spot it because look, the same level that was a strong support back then that we were looking at, price rejected it. Okay, I can guarantee you if we were to run a fib, remember that 61 to 78.6 zone that we looked at in the very beginning of time? Formed it again. It like literally hit right in this zone, respected my 78, and it formed a double top. Kind of similar to what we're looking at. Like right here, right? The double top. You mean to tell me that the markets repeat itself? Yes, they do, right? How do you know how far, how long to hold this trade to? Well, let's use that same fib. Essentially, if we're to just base it off of a fib, right? I would look, the minute that it respected this level and it broke my trend line, we should have been selling, which was in April, right? It's going down, it's going down. It formed under my negative 38, so you should be holding this until you're 23, right? And if it breaks past this level of 23, we hold it to our 0. If it breaks past, and you'd want to keep an eye out because there's a strong level of support right here. So definitely, like, at least keep it at the support, you know? Or, well, if it breaks past the 23, you want to hold it to this level of support. If it breaks past this, you hold it to your negative 27, which would be right around right here, right? If price decides to do something like this and it decides to respect it, how far do you hold it up? You guys have your take profits here. You don't even need to look at the graph. Literally, if it breaks past and it reverses here, hold it to your 23. If the candle forms above this, then you hold it to your 38. If it forms above this, you hold it to your 50, and you literally just work your way up. You have your same take profits. This negative, or this 127% is literally the strong level of resistance, and right, there's that price hit there before. So the chances of it doing it's highly likely. You know what I mean? That's literally how you want to look at trading. Now you break it down into smaller increments. If you don't want to look at the week chart, that's fine. Look at how GBP has been moving, right? What do we call this, by the way? When we see this right here being formed on the charts, what is this called? Does anyone know? A channel, correct, right? Oh, back testing. Yeah, that is a more professional terminology. No. I'm not good with that. I just, yeah. If I'm dumb, guys. I hate to break it to you guys, but if you guys really think I'm smart and intellectual, I'm not. Okay? If I can do this, you can do this, right? You could ask Dakota. Like, I literally probably the dumbest we can ever meet. But, yeah. So essentially what we're looking for in a channel, this is what I'd be looking for with GBP, right? Going up, going down, going up, going down, going up, going down, going up, going down, right? What is the likelihood of it doing this? Maybe highly favorable. And if you guys notice, right? If you look at my fib, isn't that my 38%? Right? That would be beautiful if it came and retested, right? Because if it retested right here, oh, I know what I'm doing. I'm going to short the hell out of this B. I'm going to leave it alone. And I'm going to make my money. Today, I posted today. Yeah, see? Tony's already ahead of the game. I'm telling you, sometimes trading doesn't need to be that complicated, right? Another way that you could have profited within this is run another fib inside this little, like this shoot down, respected my 61.8, right? Came down, tapped my negative 27. It didn't form under it, right? Why do you think it came up? I retested my 38. Now it's testing. It hit that negative 61.8, right? Shot up again, hit my 0. And now you're going to write it to the next level below, right? I'm not going to, I'll do it, whatever. So I can show you guys. So after that, okay, I need my negative ones. Negative 1.618. That would be another level for me. And then negative 2.618. Yeah, that one, right? Something like that. Why are you not showing, you little crap? Oh, I'm an idiot. Negative 1.618. And then negative 2.618. Okay, so if it comes back, which it hit my negative 61, right? There wasn't really a clean break. I'm thinking, I mean, it did actually form under, so we might actually see it go down, right? Especially with the news that came about. So what I would notice about this, what I would honestly do, is I would either wait for it to probably move down, like I'd look at some other confirmations, but I'd keep an eye out only because this has been shooting down for too long. It has to go up, right? Anyone catch that? No? Okay. No, that's not a good enough bias, by the way. It's not going to go up just because it's been going down for too long. But my point being, it'll either come and retest the top of this resistance right here and go down, or it's going to break this trend line right here, right? It's going to break the bottom of this channel, and it's going to continue to shoot down, right? If it does that, we're going to short this until our negative 618, right? That is the next level, or our 23 per 6 on the longer term, right? I'd probably hold it until the 23, right? And if it breaks under that, then you could hold it to that level of support, right? But this is just a smaller like intraday kind of thing. You could trade on the week, you could trade this on the day, however you want to look at it. I'd probably look at it a little bit longer term, but to be safe, I like this 23. It's still a lot of pips, right? If it goes here and shoots down to the 23, that's 248 pips. You know what I mean? If you hold it up, that's 200 pips, right? And then from this point down, that's 450. Okay. That's what I mean by you guys need to mark up your charts a lot more, because now you guys have a way better bias as to what's going to happen with this pair, especially because you guys know about the news, you guys know about reversal patterns, you guys have strong areas of support and resistance, you have an actual markup, right? You know that if price continues to break past this channel, then we're going to short this, right? We're going to catch a good 200 pips down, okay? And if you don't want to wait however long it's going to take to ride those 200 pips, take 50. 50 times 4 trades, is still 200 pips, right? You're good. Find a trade that you know is really, really going to shoot in your favor. And if you don't want to wait the whole time, like I don't, trade stack, catch the same amount of pips, but get a good entry. I know that if this continues to go up, if I know that this forms above my 618 right here, this is going to come and retest this zone right here, right? That's what I would look for. Now, I don't like to counter trend, so I probably won't buy GU, right? I only want to look for mainly a sell. Why? Because you want to follow the trend, right? The markets fuck you up enough. The last thing you need is for the banks to play you out or to counter trend. Trust me, the biggest like ways that people blow their accounts, honestly, is off of counter trending all the time. Why did you jump in on that buy? Well, I think it's going to pull back. Just follow the trend and you'll be safe. Your trades will work the majority of the times, right? So now when you look at an intraday perspective and you're trying to figure out where price is going, now we have a clear view as to what's happening, right? We're at this price right here. Are we going to trade this right now? Chances are we won't. How would you want to tackle this trade? Draw a trend line, right? If price breaks above this trend line, we're buying, okay? Where are we buying to? This little zone right here. If you notice, it's a pretty good price reversal zone, right? How far do we hold it to? Right here. Let me look at something real quick. I want to test something out to see if I'm not that dumb. Chances are this level, this price reversal is probably going to be a pretty good one. Price reversal, price reversal, price reversal, price reversal, price reversal. You guys see that? That's a pretty solid level of support and resistance, a pretty solid like price reversal zone. So the odds of this really going down to tap this zone is highly favorable. Okay, same thing with this zone here. Okay, price reversal, price reversal, price reversal, price reversal. Technically just support and resistance, price reversal, right? Head and shoulders went up, that's why it went up, right? Price reversal, like there's a lot of like, there's really not much movement in here. The minute it breaks in here, it literally just comes in, taps it, and continues on with its life, right? So more than likely, if it comes and retests up here, price reversal, boom, you short it until here, okay? That's what I would look for. That's why I'm telling you guys, if you just look at trading in this kind of perspective, literally, I haven't even looked at an indicator, okay? The only reason why I use indicators is because if you guys know what a shift in momentum is, this is where you catch a breakout. So if you guys do this, I don't resort to looking at indicators first. I will literally look at a chart like this, mark it up. Then afterwards, if I'm like, okay, I want to know if it's going to go up or if it's going to continue to go down, that's when you use an indicator. So that's when you come on and you say, all right, let's see what my MACD is telling me. Because we know that my MACD will let me know when there's going to be a shift in momentum. We know that prices are going to shift in momentum if we see this and we know how to read this correctly, right? Oops. Ugh, I'm annoyed. I hate when that happens. But, hold on. 3, 10, 16. So these are the settings that I use, correct? Green, and I'll use white this time around. Let's see what my MACD is telling me. Let's look at the overall day chart. Okay, so as of right now, my MACD is telling me there's no clear crossover, right? I don't see any crossover yet. Momentum, the fast line is still going down, right? That's why I look at strong levels of support or my strong zones, right? So if I go back on the week chart, I want to see this on the week 2 to see, all right, well, maybe there's something on here. Ah, okay, this looks a little bit more promising. Do you see that crossover? Where is that signaling us that price will go soon? A little bit more to the upside, you know? Let me see. Let me zoom out a little bit more. And let's just draw a strong level. I'm not going to do every time chart like I have before, but let's just kind of compare. I know that when price reaches this zone right here, I'll put this in lime green. This lime green, when all of the little green momentum, the slow lines are reaching this lime green zone, there's usually a good buy, right? Buy, 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 buy. There's usually a strong shift in momentum here. If there's a crossover and it's in my buy zone, there's a crossover and it's in my buy zone, right? So I'm going to look at this zone right here, 0241. I'm going to do the same thing, except I'm going to put this on red for my sell zone, right? And I'm going to put that same exact number, 0241, sell, 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 sell. These are strong sell zones, right? So right now in the week chart, this is literally indicating to me, hey, you might want to be careful, only because this looks like momentum might shift pretty soon on the upside, right? On here, there's no clear crossover yet. So I know that, all right, on the week chart, overall in the long term, it seems like it's going to go up. But as of right now, we're still getting momentum to the downside, okay? So I'm going to zoom out. Whatever, it's being stupid. And I'm going to do the same thing. Look, there's a lot of like little green momentum lines reaching here. So this would be another buy zone for me, right? So I'm thinking, hey, if momentum is still going on the downside, perhaps when it reaches this zone right here on my day chart on the MACD, this is where we might consider a good shift in momentum, you know? Look, this crossover right here was this here. Whoosh, shot down. Sometimes, like this crossover here, don't get it twisted, that'll be a little ass pullback. So don't expect it to shoot up 10,000 pips, you know? Just keep an eye out. That momentum might shift pretty soon in the opposite direction. So I'm going to go up, do my sell zone. I'm going to do the same price, so 116. So I'm going to do 116. And this is a strong sell zone for me, right? So now I have a better idea as to where price is going. I know the momentum's still going on the downside. There's still no crystal clear crossover on the day chart. So it's still kind of going down right now. On the long term, we are looking at some sort of like shift coming pretty soon, perhaps, what the MACD is telling me. If you look at this on the 4-hour, same thing. There was a crossover here. Momentum might go pretty soon to the upside, but there's really no, see this zero line right here? This is like where there's little to no momentum along this zero line. So there's really no big moves as of right now that I'm looking at that will make the market shift like crazy. You know what I mean? So as of right now, momentum's still starting to go down. There's really nothing crystal clear on my MACD. It's not signaling me something big. This is why I use indicators to give you confirmations. You don't trade off of these. Look at your ball and your band. All right, let's make this a little bit bigger. And then the background, we want this a little bit. Okay. So now we're going to look at probability, right? We're going to look at the probability of this going in your direction. So on the week chart, right, price is very close to my bottom Bollinger, right? It hasn't crossed it, but it's close to it, right? So the minute that it crosses this bottom Bollinger, the probability of this continuing to go down is what? 30%, right? Less than 30% of this going down. So would you guys rather trade it in favor of that 30% going down or the 70 coming back to at least your mean, right? What happened up here? Another reason why price wasn't comfortable being at the zone, aside from the fact that it formed a double top and that it never really was a crystal like clear formation above this resistance, was because what? The probability of this continuing to go up was highly unlikely. Where is it going to go to? The mean, right? So when it went back to the mean, price continue to go down and cross that trend line, boom, sell it, right? So right around right here, what we're gonna look for is that if we're gonna trade this, look, it still hasn't, it's still showing signs of it going down on here. On the day chart, the probability of this continuing to go down is like a 20-something% chance, 20-something% odd, right? So where is it gonna go to? My mean, the red line. Let's make that a little bit more clear for you guys. Do you notice how my mean is this same level that I was looking at? This is what I mean that you guys combine everything. It's not that you use it all at once. You literally just look at different ways to confirm a good trade. Check out the MACD indicator by Lazy Bear. Okay, bro, you're going to get me in some trouble with all these damn indicators because you know I love indicators. So let's check out the MACD. Lazy Bear dude, whoever you are, I love you. Oh my God, I'm gonna need some time to be able to understand this. Okay, so it looks like some sort of RSI. My perspective on this is that price look like it's gonna go up pretty soon. Only because just by me looking at it, whenever the green crosses the orange, price goes down. The minute the green crosses orange again, goes up. This is fucking sexy. Oh, Tony, you need to stop giving me these good indicators. No, I love you, dude. Look, momentum's still going down on the downside on the week chart, right? But so overall, it is going down, right? On the day chart, it looks like there's going to be some sort of cross, right? A crossover that's probably going to want to make this go on the upside. Was I reading that correctly, Tony? Yeah, that one is Bay. Yeah, it's easy. Okay. Honestly, I could read this perfectly. Like, I didn't even have to like know anything about this to just read it. I'm telling you, once you start to use indicators like I do, it's an addiction. Let's look at the 4-hour crossover. The probability of this going down with the Bollinger was like 27% of this going down under a trend line. The chances of this going back here, which we've been looking at overall, is highly favorable. You know what I mean? And the last one that we know that I like to look at is the SAR. So when do you want to buy at the breakout, right, of your trend line and when you see the SAR from below? So I would honestly buy the minute it breaks this trend line, but when you see these SARs forming under, that's a better reason to even buy. Because the minute it crosses this, trust me, the minute it crosses this trend line, you're going to notice little stars forming right under here gradually. Okay? It's going to happen. Right now, it's going on the downtrend, right? So I don't fight the stars. Overall, this is being resisted, but I'm just going to wait for it to break my trend line. But sometimes the SAR forms a little bit too late. SARs won't give you a perfect entry. It's just literally a moving support and resistance. So literally, you can look at different indicators. I don't know. What other indicators do you guys use? Do you guys like to use a cloud? Maybe you guys like to use Ichimoku Cloud. This is probably the worst one to use right now. Okay. So one thing you need to know about the Ichimoku cloud is we're going to look for a crossover. So the minute that our red line or signal line crosses over our blue line, we buy, right? That's simple. Right here, when price starts to go above, what I would say too is that when the candles actually form above the red line, buy, right? When they form below your red line, you sell. So the minute that you see that price kind of forms above this red line, you want to buy it, right? What's happening about right here when the star or the candles form above the red line? You see it go up, then you see a breakout, pulls back, and it goes back up, right? Then when you see it form under a red line, sell, right? You see a crossover, retest, sell. You know what I mean? It just depends on how you guys like to confirm your trades and look at your trades. That's why I can never tell you guys what is going to happen. You guys aren't wrong the majority of the times. It's just that you want to have a better bias and it's just going down because it's going up. Sometimes it's pulling up a chart and saying, I'm looking at the MACD and I see a crossover, I'm going to buy or sell, is not enough. You use it to confirm things like this. Because what we want to catch is a shift in momentum if we are going to see this go up on the upside, right? What we don't want to do is literally just entering this now because we think so. You know what I mean? Why? Because we don't have a clear setup. We know that if it goes above this trend line, buy. If it goes below this channel, sell. You know what I mean? And we have our zone set for us. And if it reaches the zone, and if it doesn't break above it, and it respects it, we sell it, right? If it breaks above it, you would hold it to another level of resistance. Now, I've kind of gone over a lot with you guys. Wave trend with crosses. Oh, yeah. The wave trend with crosses is beautiful. This one literally will tell you when to enter in on your buy or sell. You little piece of crap, get off. So the minute we see a green dot form, we're going to want to buy. It looks like it's really, really oversold. Got it, huh? It's oversold. Price is very oversold. So we're going to look for a green dot to form. We're going to look at this in every time chart, though. Day chart. Price is really oversold around here, right? We don't see a green dot yet, so we don't see a crystal clear entry. And sometimes I wouldn't even just look at I wouldn't just look at a dot to form because look, formed a dot here, people probably sold, then bought, then sold, then bought, then sold. You want this to confirm with every one of your other pieces of analysis, right? What I would say is if you're looking at a good buy here along with like 20 other confirmations like I've showed you, that's when you do it. Dude, I'm the king of confirmations. Like I used to literally like, if I didn't have at least 10 confirmations between, that's why I would trade stack. Because if I had 10 damn confirmations on a trade like I do here, trust me, I will trade stack this shit because I know that the favor of this going and like the odds of this going in my favor is highly likely because of how much I've confirmed it. Like I said, sometimes as simple as it breaking my trend line is enough, but I have so much more analysis that the average person that would look at this trade and say, I think this is just going up. How far do I hold it? I don't know. I will give you like 10 facts as to why this is going up. I literally just gave you facts after facts after facts. Strong support, fib, MACD, like trend line. What else do you need? You know what I mean? Like, why do you think I'm super confident in my trade? Oh, I'm still holding it, but it's pulling back. What do you mean? It's going to revert. Trust me. I know what I'm doing. Like, you don't need to tell me. I don't think you saw what I saw clearly because if you did, you would have done it. You know what I mean? King of confirmations, dude. Jesse, whoever you are, you're so cool. Can I be you? Um, but yeah, do you guys have any questions at all on anything I've gone over? Like, I know this was a little bit like, this is supposed to be basics and like all of that, but I feel like a lot of you already know this stuff. Yeah, ask me anything. Like, this is we're covering psychology after. Dakota, you're gonna have to help me with that. I just wanted to help them. How do you set up the dots on the wave trend? No, it's already set up for you. Do you want to go over that? I don't have a packet. The wave trend, you literally just go on there and it has the dots for you and it actually colors your candles for you, right? So when it calls out this buy, it actually turned this candle green. I'm gonna shut up. Do you ever use a momentum indicator, helpful or not? I don't think I do. I could look at it. One thing you guys need to know about indicators is that a lot of indicators are actually manipulated by banks. That's why I don't just use one indicator. I use like 100 because I figure I'm like, okay, if at least 5 of these are confirming what I'm looking at, I'm okay. Okay, like at least 20 of them. If 100 of these indicators that I use confirm them, then I'm good. I'm just kidding, but I don't even know how to read this. I'm sorry. Uh, I would assume that when price reaches down here, you usually want to buy. And I would assume when price reaches up here, you want to sell. I don't know. I don't. It's a little bit confusing. I'm going to have to back test this and kind of look at the price and like see how it makes the overall like market move and how to read it. But it looks promising if you know how to use it, you know? Yeah, you need to add levels to the momentum indicator. Okay, yeah, we'll talk about that another time because I've been learning so many indicators. What's a good broker and why? Okay, so with brokers, it just depends on what you're trading. Okay, so this is like a question that sparks a lot of debate, only because people want that one broker that's like perfect, like a one fit all. Okay, and you're not gonna find that. There's literally not one broker that'll work perfect for me and it'll work perfect for Dakota and Tony and Brian and Bryant and everybody else. Everyone trades differently, right? Like Dakota likes to trade crypto, right? Dakota likes to trade oil. Dakota likes to trade gold, right? Dakota likes to trade a lot of exotics that most people don't, right? Which is why he needs to find a broker that's accustomed to what he likes to trade. Okay. If you just only want to trade Forex, then there's tons of brokers that are amazing for that. You can go with Liquid FX, you could go with LMFX, right? FX Choice is a pretty good one. I don't have them, but I know that they're pretty good. Traders Way, a lot of people use them. It's just dependent on what you want to look for, you know? Me, on the other hand, I went with JobFX. I still have them. The only reason why I'm still using them is only because I like to trade crypto. So I'm kind of only using them up until I find another broker that gets my account verified and everything, and then I can deposit my money with them. Because it takes a couple days to get your account verified. But either way, I use Liquid FX and I for Forex, and I use JobFX for crypto whenever I want to trade that. Which lately I haven't really been keeping too much up to date with them. I'm not gonna lie. So I've been using more Liquid. Um, but it just depends on what you want to trade. That's $1 million question. I don't really know what you like to trade. If you just want to do Forex, Liquid and LMFX. If you want to do Forex and crypto, I don't know what to tell you because I'm looking for a broker myself. So are we in the same boat? A Liquid is going to allow crypto pretty soon, but they've been saying that since like April, since I've had them. So it might take some time. But yeah, that's my bias. Yeah. Does anyone have any questions on anything that I've gone over? Do you guys kind of see the work that's cut out for you in terms of looking at a pair, analyzing the market, looking at previous levels, right? Does this make trading a lot easier? That's why I'm saying, and if you could find a solid move, right? If we're saying that once it breaks this trend line, like let's say right here, it's gonna go up 197 pips. Let's put 200 pips. Don't you think it'll hit the 50 pip mark faster and safer? You know what I mean? This is the next level of resistance, which was also support right here. So me personally, if I see it cross this trend line and I were to enter in around this, I'd probably just take 50 pips, do 4 of these trades, catch the same 200 pips, but faster and safer, and I'll get the hell out because I confirmed a really, really good trade. The settings for the wave trend is already set. You don't need to you don't have to change it at all. You just go to the wave trend, you add it on, and it's set for you. I don't need to change any settings. Yeah, I'm not saying like every single trade stack will work for you unless you do it correctly. That's why like I'm pretty solid when I have my trades because I only trade when there's a good setup. You guys know that about me. So I will look for a good 100, 200 pip move, and I will take a small little percentage of that. I'm okay with just 50 pips. You could call me a loser because I didn't ride this whole ride up, but trust me, I caught the same amount of pips a lot faster and safer than you did, and I didn't have to look at my charts the whole time, and I was tanning the whole time and sleeping, so, you know what I mean? But Only stack when in profits. Yep. Mine doesn't look right at all. I don't think you got the right one then. You go to indicators and you type in wave, and it's this one here, wave trend with crosses by Lazy Bear. You add it on and it's set up for you. That's what we're looking for. Yeah, any questions at all? Did you guys understand this? You got value provided. I withdrew $50 on my bank, and now they keep denying the other transfer for 150. I don't know what to tell you, honestly. Jafix is a little bit of a little shit sometimes, especially lately. Just keep bugging them. That's what I would say. Keep bugging them. Keep talking to live support, and if not, sue them like the other person is. Probably why they're getting sued. But yeah, did you guys? What pairs do you guys like to trade? I want to get an idea because I already marked up GBP USD. Okay, you guys are ready. If you haven't taken a picture of this, I don't know why you haven't. This is a pretty good setup in my opinion. I know exactly what I'm going to do. I'm probably going to trade stack this shit until this 50 pip mark, which is about what, 29.67. So I'm going to look to hold it probably until here. You know what I mean? And I probably just want to trade stack the minute that it breaks my trend line. Every indication is telling me that if it breaks past this trend line, the trend line is like the biggest thing for me. If it breaks past this trend line for me, I'm going all in. Let's mark USD Oh, no. I'm not going to mark up every single chart. One thing I'll tell you about USD is that if this is going up, USD is going down. Okay, so if this breaks your trend line, that means that the pound is gaining strength and the dollar is losing strength, right? So if the pound is gaining strength, so is the euro, which means that so is the Swiss franc. And we know that the US dollar is dropping, right? So if we look at USD we'd want to sell that for a good 50 pips, and you will still make your profit. That's why you need to know correlating pairs, because without me even needing to mark it up, I know the minute that I do this, you're right, USD is going down. You need to know your correlating pairs, right? That's why I figured that gold is going to continue to drop only because, hey, if that hoe decides to, the longer term, it's going to go down, right? Because pound is going down, gold is going to go down. They follow together. AUD is probably going to go down. A lot of different pairs are going to go down, like severely. But in the meantime, we might experience some pullback. We'll be fine with that, you know? Not saying every single pair is going to shoot up 200 pips. I'm just saying that the pound's going to shoot down and it's going to break. And because of this, there's going to be some sort of instability in the market with a lot of other pairs. So I want to chart them up just like I did this to get a clear view as to what price will do. Okay? Do you guys know how to tackle this trade now? This is a game of patience. Literally, you could place your call level right at about, if I'm going to shoot for 50 pips, right? So 50 minus 66, I'll draw a line. That would be about, what's 66 minus 50? Is that 16? I believe this is 50 pips exact. Yep. So what I would do is I will just place a little call level right here at 29.16, right? And if I get some sort of break of my trend line and it breaks this level, which if you notice, it's literally just a level of support and resistance, I'll catch my 50 pips and catch the whole move just in this little move right here. And it's safer, right? I'm okay with that. Because either way, if this decides not even to reject up here and go down, the next level where it'll decide to short is right here. Why? Because of market structure. Give you an entry for a sell, it might come and retest and shoot back down. You don't know. But the safest bet is to hold it up to this level of resistance. So I'll catch that whole 200 pip move if it does play out with just a small little bit right here. I'm not going to be picky. Trust me, I won't. So I'll place my little call level. The minute I see it and it looks good to me, I'm going to place my little buy. I'm going to forget about it. I'm going to move on with everyday life. And then maybe if it continues to break past it, I'll hold another maybe 50 pips. Maybe do trade stack 2 of them this time. Or maybe I might let one of them ride longer. You know what I mean? But It's all the way that you guys want to trade. So yeah. Any questions at all? Dakota, did you want to cover anything? You want to go over the psychology at all? Did anything you want to add on that you think is essential? Okay. I'm gonna stop sharing and then I will shut up. I hope this provided value, guys. Literally, the only reason why I'm teaching you this is because this is how you like literally prevent fucking up. Like you don't want to mess up in the markets. We're not here to gamble, okay? And yeah, okay. I'm gonna mute me and unmute Dakota. I am.
All right, guys. So Jesse said we're going to cover some trading psychology, and I'm actually just going to recite some stuff from AstroFX right now that has just helped through my trading journey in order to be able to just become a profitable trader over time. All right. So first and foremost is that there's a fine line between losing money because of your trading and losing money because of you falling into stupid traps. So one of the main things that you guys need to do is that you need to realize that losing trades are part of the reality of being a trader. All right. It's actually like in the job description. You know what I'm saying? All traders, regardless of whether they're operating from a bedroom or on Wall Street, will encounter losses. Doesn't matter what your success rate is. So just be aware that you're going to be taking losses. And unfortunately, because you're taking losses in trades, yes, you will be losing money. So you need to prepare yourself mentally to be losing money. All right. And the main reason that people end up failing in Forex is because 90% of those people that actually do it, they tend to lose money and they lose trades and then they lose confidence and they can doubt themselves completely and then they get out of the markets. So just as long as you really stick through it, whether it takes you 9 years to amass, $40 million in Forex, is it really going to be worth it? Absolutely. You grinded 9 years of your face off for sure, but now you got millions of dollars to compensate. So I think that's a pretty good, trade. That's what we call leverage right there. All right. Another thing right here, this is one of my biggest problems, exactly what Jesse was saying earlier, is getting chart crazy. You know what I'm saying? There are numerous fundamental impacts that can distract you with news and stuff like that, and trading systems and softwares, and even using more than 10 indicators is just unnecessary. As long as they make sense to you and they go with your trading plan, you don't have to be chart crazy. Like he also said, you don't always have to be on the charts. There's a certain level just because you see me consistently being on the charts, and other people don't need to be on the charts as much. Like I'll be on the charts because I like to be on the charts. If it drives me crazy, I'm trying to force myself to do other hobbies. So I feel you guys. Some people really get passionate about it, and that's cool. But you don't need to be on the charts all the time. Just essentially get your analysis, place your stuff, check on it every few hours, if anything, or every few days, depending on what your trading style is. And just trust yourself and just let it ride. Come check on it sparingly. It'll help with emotions as well. One of the main things also is over trading. All right. Most traders do not make money in the markets or attain longevity for one simple reason. They trade way too much. All right. You can over trade on demo accounts, and that seems logical and cool and stuff like that. But there's a certain level of psychology involved with the fact that it's not real money. So you can over trade on demo accounts where you need to take 5, 6, 20 trades in a day or in a week even, and that's just not necessary. Like Jesse said, you don't need to be swinging for a 200 pip move on 6 different pairs. Just take your 200 pips on that 1 or 2 pairs that you can manage and that you do want to perfect, and just let that marinate. You know what I'm saying? So don't over trade. You don't have to take every trade that everybody wins. And I understand when you guys see all these other Telegram chats where people are calling winning signals, it's tempting to not want to jump in that stuff. But to be real, you just got to stick to what your trading plan is. And as long as you're winning on a week-to-week basis, then it really doesn't matter what everyone else is doing. So just try not to overtrade. Don't let the emotions take in. Stick to your technical skills. All right. Another main thing is also not applying your risk to reward and your money management correctly. You guys, I know not many people like math. That's why people invented calculators. You don't need to be the sharpest tool in the shed to understand that you need to calculate how much money you're willing to lose by your pips and your lot sizes and how much that affects your account. You know what I'm saying? If you guys want to win, if you guys legit want to turn $100 into 100K, you can't be, you know what I'm saying? Yeah, you can do the same lot sizes or whatever the case may be in order to attain $100. But if you guys are losing on those days, because mind you, you're not going to win every trade for the whole challenge, right? You have to be aware how that affects your account. What do you have to do better on the next day in terms of actual numbers and stuff like that? Use a calculator, use an Excel spreadsheet, use whatever you need. Get a trading journal. We've discussed it a couple times already on a couple of Zooms. Tiffany mentioned it earlier in the chat and everything too. Definitely get a trading journal. Write out all your stuff. Even write out the emotions that you felt when you were taking the trade. Were you taking the trade out of boredom? Were you taking the trade because, you know what I'm saying, you were just like on the chart? Were you taking the trade because Jesse marked up GBP USD and said it was a buy and it was oversold or whatever he just threw at you? It doesn't like matter. You just got to write it down and really understand what you were doing, why you were doing it, and what were your emotions behind it and your whole like psychology about it. All right. So the main thing is that it doesn't matter how good of a trader you are and the eye you have to spot trades. If your risk and reward and your money management isn't up to standard, you will never make money long-term in Forex. Okay? It does not matter how many trades I take. If I over leverage on my stop losses and stuff like that, that will reduce all of my wins. So definitely just, you know, keep to your skills. Definitely rushing too. That goes back into the thing that I told you. Yeah, we're in a lot of Telegram groups. There's a lot of good traders. Jesse calls out signals. I call out signals. Karim does. You know, we have swipe trades. We have Paulino on Pip Field. We got Jimmy. There's a whole bunch of people that are good. You don't need to FOMO into trades. You do not need to rush into trades. If they do not meet your setup or the move has already been made, suck your teeth, move on, and see where you could have caught the next freaking move. All right, straight the hell up. Like, I don't want to hear anybody like you know what I'm saying, being salty in the chats, talking about like, oh man, everybody, I was sleeping and everybody caught this trade. Okay, next time you're going to be up, you're going to catch a trade, and Jesse and I are going to be sleeping. So what? We're not going to suck our teeth about it. The markets are not going anywhere. We're still going to catch our pips daily. We're still going to double or triple, compound your accounts, whatever your goal is. That's the whole thing. So you don't need to FOMO into everybody's trade. It's okay. If you're already into 5 trades and me and Jesse see a fire-ass setup, if one of your other ones are not up to par and you want to close it and open a new position on ours, that's a different story. Do we encourage you to take another position on a trade because you already got like 10 going on? Absolutely not. You don't need to get every trade. You don't need to FOMO, and you don't need to rush. All right. Another thing too is you're chasing the money, not the pips. I understand times are hard. Not everybody here has $160 a month plus enough to fund a trading account every single month. It's understandable. You don't need to bite more than you can chew. With the compounding interest effect, you know what I'm saying? Starting off with $100 or $50, you can literally make that into 6 figures in 1 year. Guys, like, I mean, I don't know where you guys are, like, parents are, the people that you guys socialize the most are, your friends. How many people do you really know that are making 6 figures actively a year? You know what I'm saying? And they only really trade 5 days a week. You only trade 5 days a week, and you don't need to be consistently on the charts. You just kind of take your trades and you do your thing, and you can make those 6 figures. Why are you rushing it? Why do you need to be a millionaire because you see, you know, Sean Lee and freaking, you know, Chris Terry and whoever the hell else you guys are following on Instagram becoming millionaires already? They took their time. You ask all of them, watch all of the interviews. None of the success happened overnight. So don't expect to find that lottery of a trade that's going to be like 600 pips. I threw a standard on it. Oh my God, yeah, I just made 60K. It's not going to be so black and white. I wish it was. Trust me. If not, I would not probably be sitting in my mom's, you know, crib. I'd have her sitting in her own crib and I'm somewhere else in the world on a laptop already. But that's not the case. So I'm going to wait. I'm going to be patient. I'm going to compound my stuff. I wouldn't even recommend withdrawing your compound account until you've even hit 5 figures. I wouldn't even recommend it, to be real. Exactly. Rome wasn't built in a day. If you guys follow religion, God took a break on the 7th day. It took 6 days to create the universe. If you guys are really into that, you understand that it'll take 6 days for you guys to be able to rest on your 7th. So literally understand that this is still your Sunday. This is still your Monday, depending on which day you guys look at as the beginning of your week. And literally just let it marinate. Compound your thing over time. And chase the pips, not the money. Understand and feel in like acceptance in the fact that you're literally catching positive trades. Because essentially, like, good trading is not winning all of the time. It's winning with a profitable strategy over a long period of time. Okay, so that's all that really matters. So just make sure that you do that. And another thing too is that people to come in here with no game plan. Like, straight up, like, you need to understand, like, how Jesse knows that he's going in for 50 pips and he's risking exactly 15, and he knows exactly what that's going to do to his account. And he knows what that'll happen if he stacks it, whether positive or negative. He understands all of those things before he takes a trade. You know what I'm saying? He even says it himself. He's not over here doing all the numbers. He's not, like, he just kind of does it really quick. It's not very hard. You just kind of plug that stuff in. If you have an actual game plan, like, we have spreadsheets that we've provided for you guys on how to effectively compound your account, whether 5% is your risk management or 10% or whatever it is, your lot sizes, your example account number size. We break it down. Like, it's so many people giving you so many tools that you just really need to utilize, and just understand that the game plan is essentially what you need to get down to. And another thing that's, like, I mean, this is probably one of the ones that I actually never followed because to be real, I probably made one demo account and I traded on it for about like 2 or 3 days. But one of the things that I cannot stress that I need to that I need to embrace is that you should not jump from a demo to real. There is perfectly nothing wrong with you taking 6 months even to be on a demo account, to understand your trading strategy, your trading game plan, all that stuff. Just because you have the 5% of traders such as Jesse, myself, Jasmine, freaking whoever the hell else you know that straight up jumped off the porch to like into a live account in less than 3 months and then ends up being profitable, that's like, you know what I'm saying? Like, I'm not trying to like put us on a pedestal, but that's like a shiny fish, you know what I'm saying? It's so rare. You're not going to find everyone that has the same type of scales. So like, it's perfectly okay that some people are able to do that, but like, honestly, there's nothing wrong with the demo account. I created a demo account specifically because I wanted to test a new strategy. I tested it so much within my amount of time that I decided to do it on my live. And honestly, I'm not going to lie. In accordance to my risk management and as much money as I make with trading, I don't care if I start up a live account with $100 and lose the whole thing in 2 days. To be honest, I really don't. But not everyone has it like that. So I don't expect everyone to jump into a live account and straight up be willing to blow $100 a week just to test a new strategy. It does not work, and it's not going to be so clean, cut, and bold. So it's perfectly okay to be doing demo. If you have a profitable strategy, keep that on the live. If you want to test something new or you're not even fully confident yet, stick to demo. No reason to rush, all right? And another thing, too, even I fall from it, Jesse falls from it, overconfidence. Just because you win a lot of trades does not mean all your trades are going to be winners, all right? Like Jesse said it earlier. He was like admitted, like he was like transparent enough to say that we lost on the USD JPY. We thought we were going in for a buy. We could have taken profit about 10, 15 pips. We were being greedy or whatever the case may be. We were like, oh no, take profit too. We're litty. And then we go back to reevaluate it earlier today, and like everything on like weekly, daily, and like hour 4 is basically saying UJ is not really a buy. We saw like a break of a channel and everything. Indicators galore saying no way, Jose. So trust me, you know what I'm saying? Overconfidence definitely happens. That's why you need to stick to your game plan. If you're already in a certain amount of trades and you start getting overconfident, you want to take a certain other trade, just don't do it. Like literally, just don't do it. Just suck your teeth and just take the loss and don't catch the trade. But that's just some notes from Astro FX. You know what I'm saying? So definitely master your personal trading strategy and understand that your trader's mindset like this. A Toyota takes 13 hours to build and a Rolls Royce takes 6 months. Good things take time, and so do good Forex returns. All right? So just like exactly how you don't see Toyotas being sold for the same price as a Rolls Royce, just understand that if you guys want to be the Rolls Royce of trading Forex, you need to take about 6 months. All right? Not to try to perfect your stuff in 13 hours. All right? And that's what I have to implement to that. Hope you guys learned something, whether from, Jesse's technicals, and his psychology, my psychology. I tried not to be on the technicals today. I'm trying to be more away from the charts, just like Jesse said. I'm taking time. I even picked up video games again. I admittedly have not touched my PlayStation to play video games since January, so it feels good to finally take a break. I feel confident enough in my strategy where I can leave stuff alone. If you catch me on the charts and I've been on a Zoom for more than 12 hours, somebody come slap me, all right? Like, I need to stop doing that, all right? No more neglecting sleep. I'm not playing anymore. But just know, yeah, see? You can agree to that. I drive him crazy with how much we were on charts. We were catching up last night, and the reason we took trades is because I ended up sharing my screen and showing that I was on charts. So me and Jessica,
that's literally how it happened, guys. I promise you, I wasn't even trying to trade. I was like,
no, it wasn't, and neither was I.
He pulled up a chart, and I was like, I'm fucking in.
Yeah, and the next thing you know, we were up until like 6 o'clock in the morning my time.